most people, and especially investors, they appreciate technology and want it in their lives. So let's dive into one of the first topics, online trading.
Well, let's back it up, because
Okay.
here's the one thing that I actually think is ironic.
Okay.
Today, technology is so interconnected with people that you don't even realize it. Like, for instance, this phone, right? We all think we've had these things forever. They've only been around since like 2008.
True.
I would venture to guess, regardless of the age of somebody, if you said, what would you do without your phone? The answer would be what? I don't know. Like, we had the derecho happen here in Cedar Rapids and Marion area, Iowa, and we had no cell service. I had zero ability to access any technology for 10 days. After the first,
yeah,
I was literally driving 60 miles north of Cedar Rapids to a small town, parking in the Walmart parking lot so that I could get cellular service. I'm not talking about not having Wi-Fi. I'm talking about cellular providers could not provide any type of connectivity. And I told my wife, I'm like, we got to get out of here. I got to work. Like, we have to go somewhere, because I can't be without any internet, any ability to access information for 5 days. Like, it's not fair to my clients. It's not anything I want to do. My kids don't want to do it. I mean, so you think about that. 20 years ago, we sat at home and we watched TV and we read books, and today can barely make it 24 hours without an electronic device. I mean, I'm driving an hour to get on it because I couldn't make a phone call. 20 years ago, you had a landline at your house. As long as the phone lines were good, you could make a call. So I couldn't make a phone call. I couldn't book a hotel. I couldn't book anything because I wasn't connected. So that's how much it's changed, and we don't realize how fast it's changed. So I think what we're going to talk about is, let's go back from an investment standpoint, kind of where it started. And it started, a while back with online trading, right?
Yeah. Yeah. And you can speak probably more to this, but so trading, there was a day where if you wanted to make a stock trade or a mutual fund trade, you had to call your broker on the telephone and let them know what trades you wanted to execute. And then probably starting in the 80s, I guess companies like Charles Schwab and Fidelity started making online brokerage platforms for people. So could you touch on how that has helped investors, maybe how it's hurt investors, and just in your insights and thoughts into that?
Great question, Elias. And, you're right. If you think about how it used to be done, you had a broker, there was a specialist, right, for each stock, facilitating trades. He was there to create liquidity. And in the 80s, they started online trading platforms, and they morphed into, the E-Trades of the world. And the whole idea was, back in 2000, I remember, no one's going to need a financial advisor. And I shouldn't say financial advisor. I should say stockbroker, because of the rise of the financial advising style practices the last 20 years, where, in 2000, you still had stockbrokers who were giving you stock tips, and you're buying, those things. And online trading came out, and it was the rise of the day trader, .com bubble. Whatever you bought went up. I think there's a Janus Henderson fund that just went through the roof, right? We all remember what happened. And there was this massive pullback in technology type stocks. I remember my cousin used to host a local show here in town, and they'd have the financial advisor, and they'd have a research guy, and people would call in for stock tips, and they're doing this over the air. And I mean, as fast as he said, I've never seen anything like it. People are just calling in, tell me about AT&T, tell me about McLeod, tell me about this stock. And that's what they were doing on the show. And that was the rise of online trading, right? You could go, I remember E-Trade was the new account. We're all going to be day traders. Well, that all ended in 2001. But what it did do is it blazed this path for these companies and these online platforms to bring better pricing transparency to the market, and allow the person that doesn't want to have to call a stockbroker or wants to do their own research and wants to place their own trades, allow them the ability to do it.
Yeah, so the availability, and if you want to be a do-it-yourselfer, the opportunities there, and the fees are fair. But But when you're talking about because we've talked about it before, but your cousin's stock tip radio show, and then I think about our firm's radio show that's been on for a decade, and our podcast and radio show that we're doing now. I don't know how those two shows could be like any more different than, oh, just give me a stock tip when we're talking about let's do a full comprehensive financial plan for you and set you up for success.
They're polar opposite. And what's interesting is what they did 20 years ago, we actually couldn't do today, right? The regulatory landscape's not going to allow us to go on there and talk about an individual stock because at the end of the day, we don't really know if that stock's good for one individual person or not, right? That's predicated upon the financial plan we put together. And you're right, our show is polar opposite of day trading. But there are similarities between technology, right? Just because we don't day trade doesn't mean technology isn't important to what we do for people on an everyday basis. And technology is so intertwined. I think about, how I manage my own money and keep track of stuff. There's all these different apps out there. You have personal finance apps. You've got the Mints of the world, Quicken. LearnVest is one of the newest ones people are starting to track. But they literally can link all these up to their spending habits and have a snapshot and say, what am I doing well and what am I doing bad? And it's all, once again, facilitated by the smartphone.
Yeah, it's accessible. It's right on your phone.
It's unbelievable how much and how far we've come in 15 years. I remember I got my first phone back in 2002 when I went to college. I was literally like a sophomore in college when I got my first phone. Today, kids get their smartphone when they're like 10. My 5-year-old goes, Dad, can I get a phone? No, you can't have a phone. But she already wants a phone. When I was 5, I was thinking about G.I. Joes, not the smartphone.
Right. Did you ever play Snake? Remember that on the old cell phones, the Snake game? Did you ever play that?
No, but you know what I do remember? My mom happened to work at a company, and she was not technology space, but she was a secretary, so she was like in tune to stuff. My dad taught at college, so I remember having this game where you typed letters and it kept track of how fast you could type. Like that was the game my parents gave me to play. It's like, your accuracy.
Is there a little race car?
I don't remember. All I remember is like it'd tell you how many words per minute you did and what your accuracy was. So I was fortunate at a young age. I actually got really good at typing, and I got used to that keyboard. So I've always tried to embrace technology. I haven't kept up with it, but as well as I should have. Once, part of our illness of 2021 is how do we embrace this technology and how does it help make our clients' lives better?
So how can